Welcome to The Explainer. Today, we are digging into the incredible story of Marubeni, one of Japan's massive trading houses. We're going to unpack its dramatic 5-year comeback and its seriously ambitious plans for the future. Okay, so let's just dive right in. This is the classic turnaround story, right? We're talking about a company that really stumbled, posting a huge loss, but then completely reinvented itself. And now? Now it's aiming for a truly mind-boggling valuation. This is the journey of what's called a Sogo Shosha, a general trading company, fighting its way back to the very top. So here's our game plan for this explainer. We'll start with what Marubeni actually is, then we'll track its incredible V-shaped recovery. After that, we'll check in on its current performance, break down its new blueprint for growth, and finally, see how it all stacks up against its fierce rivals. First things first, what exactly is Marubeni? And maybe more importantly, what in the world is a Sogo Shosha? You can think of them as the circulatory system for the entire global economy. Seriously, they're not just buying and selling stuff, they are global business developers. They build, they finance, and they operate pretty much everything. We're talking grain silos, coffee plantations, all the way up to giant offshore wind farms. They literally connect industries and economies on a massive, massive scale. All right, now for the main event, the 5-year transformation that completely reshaped this company from the ground up. This chart right here shows the comeback in action. Now, it's super important to know that back in fiscal year 2019, the company posted a huge net loss of almost 200 billion yen. So what this chart shows is their core profitability, what they call substantial net income. Basically, it strips out all the one-off weirdness and shows you the real health of the business engine. And you can see how that engine didn't just recover, it absolutely rocketed upward, a textbook V-shaped recovery. So how did they pull that off? Well, it really boils down to one crucial strategic decision. They shifted away from the super volatile boom and bust cycles of the resource markets. And now, look at this. Almost 3/4 of their profit comes from more stable, predictable sectors like food, finance, and consumer goods. This built a much, much stronger foundation for the entire company. Okay, that's the past. But what about right now? Let's zoom into the present and see if that strength is holding up, using the very latest numbers from their first quarter. And oh yeah, that strength is absolutely holding up. In just the first quarter, they've already banked over 154 billion yen in net profit. That puts them on a really solid path to hit their targets for the entire year. The momentum is clearly still there. Now, this is where it gets really interesting, because this slide shows their strategy playing out in real time. Just look at the metals segment. It took a hit because commodity prices are down, but that weakness was more than canceled out by the fantastic performance in finance and leasing. This is that diversification at work, creating the stability we were just talking